considered a measure of quality of financial information. By looking at restatement trends and seeing the low level of restatements, that gives investors comfort that the financial statements they use are reliable. The financial reporting environment is constantly changing, and that has an impact on the risk of material misstatement. Some of those changes include the hybrid work environment for companies and auditors, the adoption of innovative technologies, again at companies and by auditors, a very dynamic regulatory environment, including recent changes to some very significant accounting standards, and also macroeconomic events. I mean, the pandemic, increase in interest rates, other changes, those are important changes for auditors and companies to pay attention to. In general, when we look at the trend from 2013 to 2022, restatements are decreasing, and that's positive news. Specifically, from 2013 to 2021, there was a significant decrease of 58%. Now, that 58% includes a spike of restatements related to SPACs, or special purpose acquisition companies. And the reason why I think you should exclude those restatements is because they were specific to a narrow accounting issue related to accounting for warrants. And so while that issue was important, it's very easy to isolate it. And once you do isolate it, the overall trend, the broad trend, the systematic trend is decreasing. And so I think that can give investors quite a lot of comfort that restatements are at a low level and the financial reporting environment is functioning very effectively, both at the company level, at the management level, and the audit process. One of the key findings that we found when we looked at restatements during the period 2013 to 2022 was related to restatements for expenses. And so this is something that management, audit committees, and auditors should be mindful of, specifically accounting for accruals and reserves. And this tends to be because these are estimates, and estimates can be challenging. Accounting for expenses does involve a great deal of estimation, and they can often be complex. Are all restatements created equal? That's one of the things we looked at, and we used the term measure of severity, and there are a couple examples of this. We looked at what's called big R versus little r, which has to do with materiality of previously issued financial statements. We looked at the number of years that were restated, and we also looked at whether fraud was an implication. The good news is that during this period, 2013 to 2022, we saw positive trends. In general, we saw that big R, those financial statements that were material in previously issued financial statements, did decline. We also saw a shortening in the number of years that were restated, and we saw fewer restatements where fraud was implicated. The types of companies that we saw having restatements during the period 2013 to 2022 were smaller companies. That makes sense, unfortunately, because smaller companies tend to have fewer resources, and they are not always required to have management's assessment of internal control over financial reporting. The industries in which we saw the largest number of restatements was finance, tech, and healthcare. This is driven by the fact that those industries have complex accounting issues.